Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing the 1 month recap for M1 Finance individual account and the Roth IRA. So we're going to be covering the total equity between both portfolios. We're going to be going over the dividends that were paid out, what stocks paid out those dividends, where those dividends were reinvested into, the equity that we added in for the month of November, and what stocks that purchased, and then whether the portfolio moved up or down, measuring the total return for the month of November 2018. So if you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week. So remember to like, comment, subscribe, and if you have any suggestions, let me know in the comment section below, and let's go ahead and get into it. So I always like to start off my videos going over last month's changes for October 2018. So currently we have the individual account, the cash managed account up. Our total equity was at $281.55. The market gains there, we were down 71 cents in October. We were into the negative there, but we had earned dividends of $2.28, which did keep us afloat. That made us have a positive return of 0.99%. Now, we only hold VU within this specific individual account, and that makes it really easy for tax purposes. I won't have to claim any sort of taxes besides dividends as far as taxable stuff, because I'm not selling VU. I'm just continuously adding into this specific stock. It makes it very easy on a taxable account. Now, currently in November, end of November 2018, we're now sitting at $347.50 of total equity in the portfolio. Our gain for the month now is $5.25, up from where we were at. We were down 0.71, and our earned dividends remains the same at $2.28. So market gains were now up $7.53, and our total return went from being up 0.99% to now up 4.31%. Now, I don't actively add money into this specific account. This equity that's added in here, this is all, we'll go over it in the activity tab here in just a minute, but we can actually flip over there now. All this extra income, or the extra equity that's going into this portfolio, this is all from viewers, subscribers, members over on the Facebook groups, friends that have asked me, hey, I'm looking for a broker, which one do you recommend? My two recommended brokers are M1 Finance, and the other one now I learned about is First Trade. Ryan over at the Independent Investor channel, he went over this one, as he kind of discussed it. Now, they're both very similar. They have free trades, Roth IRAs, no fees as far as accounts. M1 Finance, the difference is they have partial shares. So as I add in $20 for these referrals, it buys me 0.07975 shares of a $250 ETF. So that 20 bucks buys me a partial share of that fund. On M1 Finance, I can buy partial shares. On First Trade, you have to buy complete shares. So if you get paid out $14 in dividends, you're going to get pigeonholed into buying Ford or some other $14 and below stock. Whereas on M1 Finance, I can put $20 into an ETF. But one of the negatives with M1 Finance is if you're looking to buy and sell actively, you can't do that. M1 Finance only has a 1 period per day at 8 in the morning, 8 a.m. Pacific time, where they allow you to buy and sell, and you just kind of set it up and it triggers in the morning. If you want to be more active in your buys and sells, First Trade, it's all like that. M1 Finance is more passive. It invests and does all that for you. On First Trade, you manually enter your buys and trades anytime you want. They also allow you to do options. I do have a video on why I believe M1 Finance is the best broker for 2018. I'll have that in the corner if you guys want to check that video out. So, kind of going over. So I had 3 referrals in November. So that was 60 bucks added into the portfolio. So that is a difference of what we're at $347.50, and we were at 281. That's a difference there of roughly 65 bucks. So $65 and some change is the difference of total equity there in the portfolio. We didn't make any more dividends, so we don't really have to go over dividends as far as the individual account. VU only pays dividends on months 3, 6, 9, and 12. That would be March, June, September, and December, and it pays it normally on the last week of the month. So on on the last week of December, I'm going to get paid out $1.14. So my total earned dividends for 2018 from this individual account will be $3.42 of earned dividends, and I'll probably still be positive depending on how December goes. I think we're going to end up December doing very positive, especially with these trade deals getting signed a little bit here. No more tariffs. So let's go and take a look at the Roth IRA. Whoops, daisy. So the Roth IRA here, it's at $8,223.37. Our market gains were down $286.84. Our earned dividends were $154.42. Our total gain so far for 2018 since January 8th, we were down $132.42. Our total return for the year was down 2.26%. Now, we started this portfolio at the very top peak of the market, and it had been a brutal start. We were down some 5, almost 8% at the beginning here, and we just continuously added into this portfolio. And October, we got slammed again, so the portfolio was down. In the month of October, we fell 5.83%. Our dividends we got paid out was $17.76, and we kind of went over the equity now. In November now, where do we sit as far as the Roth IRA goes? Let's go ahead and, maybe I was already there. Did we already cover this? I don't know. It's 2 in the morning right now, and I may have a brain fart. So total equity in the portfolio is $9,825.85. Our earned dividends is now $175.14, and the market gains is down $21.36. So I know we didn't do this part earlier. So our earned dividends, 175.14, and we subtract where we were at $154.42. That puts us as earned dividends for the month of November at $20.72. So that is a very nice jump there. If you guys want to do this over on M1 Finance, you guys can click on the month here, and this actually shows you earned dividends $20.72. Our market gains for the month of October up $259.70, and our total return now is 3.1. Oh, that's for the month of October. For the month of November, our total returns here now for November is up 2.5%. So that's a nice little difference of there. We were down 2.26. We're now up 2.5. Now, we went over the equity, the dividends. Now, what stocks paid out those dividends? Let's go ahead and jump into our activity here. We can see here that starting on November 5th, we were paid out $5.96 from AT&T, and JP Morgan paid out $2.74. We deposited $330. I have a video going over how I changed up my plan to max out my wife's Roth IRA for 2018. Check it out. I'll have it in the corner above. So first week in November, we bought 13 stocks. We let it just kind of, this is M1 Finance investing for us. So they bought Apple, Caterpillar, Cisco, and many other stocks here. We had $338.63 going into the market there. Now, second week of November, November 12th, we didn't get paid out any dividends. We just put in our $330 since we had some change. I specifically targeted stocks that were going ex-dividend here in the future. So I bought AbbVie, I bought Avery, I bought Lockheed Martin, Stanley Black & Decker, and AT&T. These were all either beat up. AbbVie was down, beat up really bad. Lockheed Martin, Stanley Black & Decker, AT&T. All these stocks had been slammed down some 20, 15% in the month of October. Now, in the third week of November, we got paid out by Apple, $1.99, $4.25 from AbbVie. Again, we put in another $330. We let M1 Finance invest, so they bought some more Apple, Caterpillar, Cisco, Johnson & Johnson, and so on, with $336.18 going into the market. Now, this last trade of $300, we got paid out $2.07 from Caterpillar, and we went over my five stocks I'm buying in December 2018. I covered Cardinal Health, Consolidated Edison, General Mills, Kellogg's, and Triple M. Those are the 5 stocks I covered in my video. I will have that top corner as well if you guys want to check that out. And then I also added in Southern Company. I don't know if I made a video. I believe I did make a video going over how to specifically target stocks. So that's the one I'm going to be linking in the top corner. Check it out if you guys want to look at that. I specifically targeted these ones. These were all, as far as financials go, they were all looking very positive. They had been beat up recently, so I wanted to add those to the portfolio because I believe they had much more upside potential than downside potential. Now, looking at the 1 month performance here and just the gains that we made, Stanley Black & Decker jumping back up, Caterpillar, AbbVie, Digital Realty Trust, Pfizer, Kimberly-Clark. So some of the stocks that I just added in during the month, I was buying a lot more Stanley Black & Decker. I was buying more AbbVie. I added in Kellogg, Southern Company, Triple M, Edison. I added in some more AT&T, Cardinal Health. Now, my only stocks here that were negative for the month here: Simon Property Group, General Mills, Lindell. I'm going to be selling this one. It's an international stock. It was Praxair, but they combined with an overseas company, so I may be ended up selling this one out of the portfolio here shortly. Walmart, Apple, and Altria down huge. Apple, they got slammed after earnings. Everybody really slammed them for not wanting to go forward with their phone numbers any longer. They're transitioning from a hardware to now a service company, so I going over the long term, Apple's going to be a cash cow. Services wise, they don't have to invest a whole lot of money into these hardware devices and try and have sales every year to boast their numbers. They can just have these perpetual services that they provide, and that's going to be picking them up. So Altria, let's go back out of here. Altria got slammed. They're trying to ban methanol, but I don't smoke, so they've been getting slammed because they're trying to ban some sort of cigarette. I can't pronounce it. So they're down 16.76%. Now, as far as all positions go, you can see here, let's go ahead and flip it. There we go. So Altria and Avery, Caterpillar, they're still down as far as the total portfolio goes. You can see AT&T, Caterpillar, those are my hard ones. I'm going to be averaging in. Now, I only have a couple of negative stocks here, so going into the next week, I'm going to be trying to max out my General Mills position during the month of December to get it where I want it at. I want it at 4% of my total equity of the portfolio. It's at 0.5. Stanley Black & Decker, I want to add a little bit more into that. Lockheed Martin, may not add too much more into that. AT&T, want to buy some more. Caterpillar, Avery, may end up buying some more of those as well. So we'll kind of see how that kind of all plays out. Some of my new stocks that I added in here, they're up now, which is unfortunate. Cardinal Health, Edison, Triple M, Southern Company, and Kellogg's, they're up some 2 to 4%. So I would like to wait for them to kind of turn red before I add more money into them, but they are higher percentages of my total portfolio as far as actual to target here. So some of these stocks here that are actually down actual percentage equity to my target are there. So we already covered the changes. We already covered the dividends, what stocks were paid out, what stocks we bought. Let's go ahead. We can flip over to, let's see. We can go to my spreadsheet here, but let's go ahead and compare let's go ahead and do that. Our base investment for M1 Finance for the Roth IRA is $9,679.67. I'm sorry for you guys on the iPhone devices. I can zoom in here just a bit, but some of the spreadsheet here will kind of get blown out. So our base investment here within the Roth IRA, if you guys haven't started your own Roth IRA, I highly suggest starting your very own Roth IRA. I made a video going over the differences between a Roth IRA and a taxable account. Even if you're trying to retire early, the Roth IRA is the best option. It's a tax-sheltered account, meaning that at 15.5, all your capital gains, dividends, interest that you made within this portfolio is 100% tax-free. So 2018, our base investment is $9,679.67. You can find this out by going to funding, scrolling down to the bottom, and you can see your IRA contributions. Now, at the beginning of the year, February 2018 or January when we started this portfolio, I put in $5,500 as a base, put it towards 2017 contributions. You can put in for the past year contributions up until April when you do your taxes for the past year. So in 2019, we can still make contributions for 2018 up until April or up until you start filing your taxes. Then you can't do it any longer, or maybe, I don't know if you can or not. I know April is that cutoff point where you can no longer contribute back towards the previous year. So in 2019, we're getting bumped up from $5,500 to now $6,000. So that if you divide 6,000 by 52, you're going to get about $115.35. So if you're able to put in $115.35 every single week for 2019, and that'll give you roughly $6,000 by the end. And that's what our plan is going into 2019. We can go ahead and go back over here. Okay, so our base investment, $96.79. Our dividends paid out total for the month, for the year of 2018 is $175.14. So back when we looked at this in February, our annual income back in February 18th, 2018, we were saying that our annual income would be $179.23. Our cash that we made during that month was $17.88. So we had a long ways to go here between our annual income and our current dividend payments. Now, if we go all the way back to November, we've now made $175.14. We're going to get paid out roughly $20 in December. That's going to put us out for dividend paid for the year of 2018 at $195. So we met our actual income that we were looking for. We were looking for about $180 of annual income. By the end of 2018, we will make $195 of dividend payments. Now, going into 2019, our annual income for 2019, we're looking at $328.20 of just earned income during that year. We're also going to get money reinvested, buying up more shares during that time frame, so our actual annual income may increase to some, as we're adding in that additional $6,000 throughout the year. Our annual income may end up being somewhere around $400, $500 by the end of 2019. Our total returns for the month of November is up 3.43%. Our dividends paid out $20.72. Our new equity, if we take a look here at activity, and we added $330 4 times for the month of November. That is $1,320. That's a little bit less than what we did in October. October, we pumped $2,145 into the Roth IRA. The market was red. We hadn't done a whole lot of contributions. I wanted to max it out. So we started pumping up more money into there while the market was red. I like those red markets. I really wish my stocks would go down as far as the ones that I just added in, so I could kind of put more money into them. So November, did we beat the indexes? Well, we can take a look at the S&P 500. The 1 month change for the S&P 500 up 0.72%. Year to date up 3.27%. So our portfolio did beat out the S&P 500. The total returns of our portfolio is only up 2.5%, but we have different investment styles. The S&P 500 only yields a 1.56% dividend yield. My portfolio, the way that I'm trying to create this portfolio, I want this to be, actually I can go to my research here in my pies. My portfolio is more tailored towards, where's my current one? Roth IRA. My portfolio is more tailored towards a dividend investing. So if I go down here, where's my dividend yield? My dividend yield sits at right around 3.5%. I have 25 stocks. I have no expense ratio, so I don't pay anything to hold my stocks, and I'm making roughly $350. Wait, what is that? Yeah, for every $10,000, I make roughly $350. I guess if I put in another $10,000 into here, but oh, it shows right here. Roth IRA. Oh no, it's up 3.25%. Well, this is really weird. Okay, so I have this at around 3.45. Is that right? Where this one shows me 3.45. So yeah, it sits right around there, 3.42%. So we'll make somewhere in that range there. The difference there, my portfolio for my wife is more dividend oriented, so she's going to be making roughly $330 of annual income of just straight dividends, whereas if you invested in the S&P 500, you may make those returns of 7 to 10% per year, but you're not going to be making as much dividends, and your dividends aren't going to be buying more stocks that pay out more dividends. And I believe we're just different mindsets here. So the portfolio, this one's up 3.43%, S&P up 0.72, Dow Jones up 0.62, the NASDAQ went down 1.39% during the month of November. So that is the changes there. Let's go ahead and zoom out just a tad. That way you guys can see the entire spreadsheet here, the way I kind of track everything. So I just kind of track all my stocks. You can see my money change there, buy or hold. So if I'm up in a position, I'll mark it as a hold. If I'm down in a position, I'll mark it as a buy. So here we can go ahead and sort this really quickly by, where is the data, and filter. And I can kind of sort this by my holds and my buys. So right now, if I wanted to buy, some of my buys would include Apple, AT&T, Caterpillar, General Mills, JP Morgan, Lockheed Martin, Stanley Black & Decker, and so on. Those are all the stocks that are currently red in my portfolio. Walmart, this one's showing my buying performance is positive. So that's kind of interesting there. Maybe that's slightly off there. I think that may have been a slight negative there. I won't change that right now. Anyways, one stock did increase their dividend. So AbbVie here increased their dividend from $3.84 for the year to now $4.28 per share each year. That's an increase there of 11.47%. So AbbVie, last month I was getting, in October, I was pulling from AbbVie here $19.64 of dividends for the year. Guess what? I'm now getting paid out $25. That's an extra $5 I'm getting in just dividend income for holding AbbVie. They increased it across the board, a very nice percentage, and I'm taking advantage of that increase there in dividends. That's like a rent increase right there. So you can see that my annual dividends there increased from $281 to now $328. That's just extra equity I am constantly added into this portfolio. I'm going to be adding another $1,300. So again, we're sitting here at 9679.67, and if we add in $1,320, that puts us right at our contribution limit for 2018. So if you add in 55 by 2, you know, $5,500 for 2017, $5,500 for 2018, that would be $11,000. This will put us right at our 11,000 threshold. So on the very last contribution for 2018, on the very last week of December, I'm going to put in $330 and some change, 33 cents here, $333.33. That'll max out my contributions for 2018, and then starting the very first week of January, we're going to change the contributions back down to about $115 and just let it average in from there over the next 52 weeks into these specific stocks. Let's see here. That is basically it. You can see my buy stock performance, my 1 month performance. So all my stocks here for the month did really well. AbbVie doing, you know, we already kind of covered some of the stocks that did really well, so I won't go into that too much. And then VU here, my base investment, I only added $100 into VU. That the way that the return kind of goes is because I don't actually add any more of my own equity. It takes in the total equity of currently minus my, so here, this calculation, it takes the total value of this specific, we can go to my live data, it takes the total number of, what is it? Okay, so it takes this current value plus the change, subtract the new equity that I added in for the month, it divides it by last month's total, and then it gives me the calculation here of 3.43%. So this is the little data that it does. It basically just takes in this number, subtract this equity for the month that I put in there. That way I'm not including the equity that I added in for the month. I subtract last month's value, and then I divide it by last month's value, multiply it by 100, or just kind of keep it as a percentage there, and that's a difference of 3.43%. And I need to update this to include my new 6 stocks that I added into the Roth IRA. And VU here, I just kind of have it here. Last week of December, VU pays out that dividend. So I'm going to get a $1.14 paid out to me. And my income from November to December, I went from 547 to now 662, just because those $60 that I received from referrals was able to buy a couple more partial shares that kind of bumped it up. So now the difference in total equity between last month, so I had $8,540.85. I had gone down roughly 5.62% between both my portfolios to now this month I have total equity between the Roth and the individual account of $10,100 $173.36. The total return between both portfolios is at 4.10%. So those are the dividends that were paid out there. So overall, pretty good return there for the month of November 2018. That's why I like this dividend style. I like buying these value buys. So people, I haven't had a whole lot of people come back at me and saying, hey, why are you buying these hammered stocks? Like, why did you buy General Mills, Kellogg's, Edison International? Why are you buying Stanley Black & Decker? Stanley Black & Decker was hammered, but I believe it was going to be coming back. It's still down 6%, almost 7% there, but I'm going to be buying it right now at a discount. And I believe over the long term, this stock has 50 years of growing and paying out a dividend. Their average return per year over the last few years has been right around 10-11%. So they're going through a rut right now, but they're at a value play as far as where I believe they're at. So that is all I wanted to cover in this video, I believe. I don't know what else to kind of go over as far. We already covered exactly what we wanted to kind of go through. So that is it for this video. If you guys did like the video, hit that thumbs up button below. Remember to leave a comment below. So remember, hit that thumbs up button below, leave a comment below, subscribe to the channel. If you have any suggestions over what to cover in future videos, let me know in the comment section below. Did you enjoy this video? How were your returns for the month of October? Did you buy anything new? Did you get slaughtered? Did you go up very nicely? I like to read your guys' comments, so let me know in the comment section below. And thank you all for tuning in. I will see you next time. Have a great day. Bye.